Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and in this video we are going to be talking about my week in review, going over a few trades that I took, going over a few psychological elements that I've spoken about on the channel in the last few videos, and really diving deep on the psychological aspect of trading, as well as giving you guys a little example of what a trading week can look like for me. So I actually spent the better part of the last 2 or 3 weeks backtesting what I normally do on just the Asian session, because I wanted to try and begin to trade more during Asia, but also to demonstrate to a lot of people that are either A, working a job during the day, or B, or don't believe that you can trade during Asia, to have something that they can see and relate to and actually be able to execute upon during any session. So as a lot of you might know, what I teach applies to every single session, every single time frame, and every single market. You can see that I do have a little bit of different strategies for different markets. So actually I do most of smart money for currencies because of their liquidity and the fact that I can be on a very low time frame. I can jump down to the 30-second time frame or something and trade it like it is, for instance, a daily chart or a 1-hour chart on something else that is like crypto or something that's a stock, right? Because since the Forex market is so jam-packed with liquidity, I'm able to really scale myself down to much smaller time frames and trade that during the day. So I'm able to do a lot of my day trading during the Asian session now, and we're going to talk about that in a second. But at the same time, I have some Elliot wave strategies that I also utilize on the back end, all courtesy of VVS, and I talk with Blake all the time, so I love doing this, and he's actually in the middle. Actually, I'm not going to talk about that right now. I'm not going to bring that up. He'll probably talk about that on his own channel. But the point is, as you all understand, what we do is applicable across every single time frame and every single market. That means crypto, that means indices, that means currencies, that means commodities, that means anything. And that is why with Ment Funding, as you all remember, we are offering a ton of currencies, and you can see the spreads right here. 0 for EU, I think the lowest in the market, and a bunch of other really great ones. So definitely check out the fund if you guys want to go and get funded. And congratulations to the 4 people that we now have funded ever since the launch of the firm. We've already had 4 people get funded, which is absolutely insane. It's only been a week. And part of what I wanted to speak about today as we work through some of this stuff is a little bit more psychological based as well, because it goes to show a lot about the conception and the misconception or misinterpretation that a lot of people had on the actual prop firm. So before we do that, let's talk about the week in review. What you can see here is some very beautiful trades, right? We'll go to a 5-minute chart. Made a video on one of these trades yesterday. I think I made the video on this trade yesterday. This one right here, 2 days ago, whenever this was. And this was last night. This was great. Nice little run there. This right here was a forward tested one. I don't trade during this session here. This is American session in the morning. Usually I'm in the mentorship, working with people, talking to people, going through markups. And as you all might know, and I always say this before we get into anything, the mentorship is absolutely amazing if you're trying to take your own learning to the next level. Can I cover myself with this? No, I can't. Nice. I'm in front of it. Cool. You know, people have been catching things all day, hedging back and forth on moves. And what's cool about this specific trade right here, this specific buy right here, is that actually last night, so if we keep scrolling up, so you can see this is all still today, right? So one of the most active communities in the entire industry, not biased, of course. But if we just keep scrolling up and go and find where it is that my trades were, so that was this morning still. This is all still this morning. Jesus. Hopefully you guys don't jump off the charts. Oh, who's this guy? Oh, he's entering a 1 second on GU. Very nice. Good trade there. We'll keep going up. And again, if you want to take your own criteria, your own management, your own understanding to the next level, feel free to join up with the mentorship, because we have some extra criteria in here that you have probably never learned about, ready to take yourself to the next level. But again, as always, stick to the free content if you don't want to. You never need to join to be profitable, right? Yeah, so here we go. So we actually had Dave. He's been an amazing trader in the last month or so I don't mind talking about him right now. He's going to be getting funded with Ment Funding soon, from what I heard. So what you'll see is he also caught this buy from this specific area here. What was interesting is actually when I was talking to him yesterday, if we just scroll up here a little bit, you can see that I had this buy at about 114.127. So that's this buy right here, 114.127. You can see that entry right there. Here, we can zoom in a little bit. If you look at the side of price here, we have this entry here at 114.127, just under, just in or around there. And you can see that he had an entry that was basically right on there too, 114 just under 1.0, right? So even though these entries were on the seconds time frames during Asian session, which a lot of people would argue is one of the hardest sessions to trade, it's not a kill zone, you can't really hit anything in there, right? Whatever it is that people usually say, you need to recognize that what we do applies and works against every single time frame and any market. As long as you've gone through the steps of backtesting something and understanding it in depth, right? So this week was my first live week of trying to just trade during the Asian session. So I have my own recorded stuff of that. I'm up for the week, which is phenomenal. I'm not up that much overall RR, even though, and actually the RR is nice, but percentage-wise, I'm not up a shit ton of percent because I risk a much smaller amount, which is something that a lot of you should start to think about and do if you're on these lower time frames and if you're trying to get funded with mentfunding, which has some lower set parameters. But one of the main things that I wanted to make this video about was asking you what it is that you really want as a trader. Right, so I had a video like this a while back, but in essence, the reason I ask this, and I ask you, what is it that you actually want as a trader, is because a lot of people argue that they want to be able to do it full-time, consistently, they want to be able to travel, they want to trade because it gives them the freedom to do whatever they want, all the fun stuff that, of course, anybody might want. And of course, being in the position that I am in, with the ability to find consistency over the last 10 years in profitability in trading, with the establishment of my prop firm, and slowly the passive income that's going to come in from the funded traders that are going to be able to create profitability for my firm, and from the mentorship and the YouTube, right? So I have multiple, and soon from real estate. So we have a lot of things coming in, and soon from crypto and Elliot, and from my algorithm, right? We have a lot of things that are coming together. But I've been fortunate enough to get to the point where that freedom, that thing that everybody wants, that ability to be working on your own time, is a possibility and something that I am able to do now, right? But you have to recognize what it took for me to get here, right? It took me to disconnect from the thought process that a lot of people are very often stuck in when it comes to trading. And the reason I say that is because based on the kind of feedback, even though it was a minutia and a small minority of people, based on the feedback that I got from the release of the prop firm and how people felt about some of the parameters, is a very, very quick and telltale sign that many people are not ready to be profitable, don't want what they actually preach that they want, and aren't actually making steps and working towards the actual thing that they've created an image of in their head about what a trader, quote unquote, should be. And what I mean by that is, as a trader, you need to recognize that if you're doing this full time, that means you're no longer looking for that one little win or that quick funded account or that quick gain on an account. What you're looking for is an ability to create consistency with wins outweighing overall losses, with drawdown periods occurring, longer term drawdown periods occurring, long-term consolidation drawdown periods occurring, right? Until you have those breakthroughs in your larger trades or in your overall management, right? Because lower R or higher R is a fully valid way to trade smart money, right? I like the higher R low win rate strategy. You can also use a higher R, lower R high win rate is what you can use when I use the higher R low win rate. Both are very doable, and both are going to have, over the span of a year, 5 years, 10 years, a curve that's going to ultimately look the same. And in reality, that curve in the end is going to look something like this. And of course, for someone scalping and who's looking for more opportunities every single day, constantly getting in and out of positions, constantly managing positions, and letting potential small positions run into significantly larger targets. So like this sell right here at the very beginning of the week, I didn't just take it off fully here, right? I had a portion of this position running that I was looking to take, actually. So let me extend this. Let's go to the daily. What I was actually looking to do with that trade right here that you see right here was actually looking to take it deeper into this demand zone right here. The one that created this first reaccumulation range, broke to the top side here, and I was looking to secure an overall 1 to 232 RR on this, RR, with partials all the way through at liquidity points and inefficiencies. And as I was going to be able to do that, that one trade could amount to a very, very large win. And what happens is when you're someone that scalps the markets the way that I do, you create more opportunities for yourself to get these runs. And when you do that, you create more opportunity to have this curve develop faster and over a quicker period of time. That doesn't mean that you can't be profitable trading a different way or trading on a higher time frame. You can do that, of course. Some of my Elliot wave strategies literally focus on doing that, right? Creating an overtime consistency, even if some are going to be higher R, right? Like I didn't know this was going to run up here. This was already partialed once we hit the highs right here, right? And we're not going to go about Elliot wave right now. But the reason I bring up this idea of what is it that you want as a trader is because although you might argue, and many people constantly say, I want the freedom, I want the consistency, I want to do it full time, they also are the same people, or some of them are the same people that go and see my fund and go, the drawdown is too small, the daily loss limit is too small, the leverage is too small, I can't trade this. I don't like that the drawdown trails until my account locks in, and that means I have to wait to be higher on my account to take out profit. Because if I take too much out, I can lose my account with the bottom line being the original price. Well, to that I say, what are you in the market for, right? Are you in the market to find a quick little strategy? Not really test it. Go to any firm, get funded with that firm, get a huge sum of money on your end, and hit one trade that now, maybe runs 0.5 R, but is actually worth, 10K, 20K because it's a sizable account. Take that out and just call it a day because you made your money, right? So, because a lot of people have this kind of mentality. A lot of the mentality surrounding trading is, once I kind of get what I'm doing, I'm going to take this trade, I'm going to just play around, let one of them run, and the second it runs, if it runs, I'm taking my money out, and I'm not trading for a few months. I'm just going to leave it in there, I'm going to take that money, and I am going to just sit on it and live off it. That is not how trading works. Trading is a constant back and forth of paying the expenses, of losing trades, of commissions, of spreads, with the understanding that your overall edge in that market, whether it's lower R or higher R based on your win rate, is going to over time create that consistency that grows an account. And as a result of that, and because I've seen that same thing happen in my students, in my mentorship, and even on YouTube, and month after month, seeing the consistency that comes with getting people funded nonstop with my prop firm and other prop firms, I can see how that consistency is created and how it's bred into the trader for a long-term with a long-term mentality, right? So what I mean by that is a lot of people that one, say they want to trade for a living, but two, also argue that my parameters are too low or unfair. They're unaware of the fact that trading does not require a one-step kind of hit the take profit, right? And then sit on your account for a month, wait to get paid out, and have a reset. Real accounts that you look to compound and over time grow and scale up to accounts that you can trade more on, risk more on, leverage more on, right? And then take higher withdrawals out, are accounts that don't randomly reset and have a reset drawdown every single month. Now, I don't shun not FTMO. Well, FTMO is an example, but I don't shun other prop firms for doing that. I think it's great. And I think that if you have a system that you're happy to use with that drawdown reset and you just want to take out the profit every single month, then that's great. That's something you should go for. But I think that you should also consider what your drawdown overall looks like in comparison to your wins, because there's some people trading FTMOs or those two-step funding models that, reset your balance every single month that actually make less than they lose. But because of the drawdown that they experience and the small win they get and them stopping trading and the reset allows them to constantly stay in a little bit of profit. But the truth is that's not what a real funded trader looks like. Not even a funded trader, but not even what a profitable trader looks like. If you viewed any profitable trader, what you'll see in their equity curve is a constant and slow increase. Even if it's like this in the very start, right? As you saw in my last video, I spoke about this kind of thing where over time, it's going to pan out to a very nice curve. Like if you saw my first day, it looks like I was losing a ton of money, which I was, right? My first day of trading, let's go ahead and look at this right here. Because this is the first time I started executing on Asia, right? My first day of trading literally followed this. It followed a -1, followed by a break even that I lost money on for spreads and commissions, followed by a -1, followed by a -1 in here. You can't see it, but there's a -1 in there, followed by a break even on this, even though it came close to partials, took a break even on this, followed by a break even again, so lost on commissions and spreads, followed by a -1, followed by a -1 in here, followed by a break even, followed by a break even, then followed by the win that hit, right? And this win pretty much took care of all these losses, the commissions, and made me a little bit more on the account. So overall, I was still up on that first day, but I was ready to be negative on that day because of the way it had delivered. And that's fine. Okay, next day, during my session, very quick, -1 into -1 into a phenomenal trade that then came back to hit break even as I left some on to run. Because why? Because my target for the entire week was still this low. Right, I had this low as a target, and then this much lower target right here for an overall target if I got into sells. It comes back up during the New York and midday session, so I'm waiting. Asia starts again. Okay, same thing goes. As I'm looking to trade, again, we can take a look at this. This was yesterday. We can take a look at this, right? Started the day, there was a break even in here. There was a -1 in here. You can kind of see it, but there's a -1 there, a break even here, and then we hit this. First partials got hit break even right after. Came here and then went higher. Wasn't able to participate on that higher move. That's what happens. You're a trader, right? Next day, I did not take this. This is a forward tested trade. So I did put this in. Like I put the trading view thing on, but I did not take this trade. I don't care sharing that, right? You can just delete this. It's not happened in my trade history. These are my trade histories. Either way, I don't care if you believe me or not. The point of this video is going to be more psychological than it is to show off that I was able to hit things, right? Because no shit, we know that we can hit stuff. We've seen people get funded nonstop with my content, my mentorship, on my Instagram, in my testimonials, with mentfunding. So, I mean, you know, it just is what it is. But my point being is that as a real trader, you need to recognize an edge, and you need to recognize how that grows an account over time. And you need to recognize that resets every month don't happen on real accounts. And as a result, that's how we were able to offer our prop firm at a one step, at a no minimum or maximum days, right? With low spreads, with real live traded funds that you're actually operating on. And when we have these lower things in place, like a lower daily, a lower daily loss and a lower drawdown, we have those because we also know that we're at a 1 to 10 leverage, right? We're not looking for people that are here to get a funded account, hit a potential trade that makes that $1 million account. So like if they have a $1 million account, we're not looking for them to take one trade that gets them up like 50K on an account. They take that profit and they get a reset. We're not looking for that. We're looking to build a non-stop. Actually, here I have the mission statement right here. There we go. Here's our aim. Our aim as a fund, or not as a fund, as the intermediary to the actual fund and as a educational platform, is to build a base of profitable traders that are able to handle millions of dollars in the markets, diversifying our risk as a prop firm, and of course giving traders the freedom within our risk parameters to continue growing an account. And as they do that, they'll continue to make profits for us as well as themselves on scales that they would not have been able to do without us, right? We're not looking for the trader that wants to get a tiny bit of profit and reset their account, get a tiny bit of profit, reset their account with drawdowns that reset and reset and reset. That's not how real trading works. The way real trading works is you build up an account over time that is high enough that you can continue compounding it and take out withdrawals as you wish without it affecting the bottom line. And as you know, one more time, with the actual rule of our prop firm, as you get above that initial threshold of the actual balance, which you can see by the way on the website in the rules section, once you get above that initial balance, it locks in at that initial balance forever. That means when you take your $1 million account to $1 million and $600,000 in profit, your overall drawdown is still at $1 million, which means you could lose $600,000 with the firm and not lose your account. Well, you'll lose it at 600K, but you can lose 500K and not lose your account, right? And that 1.6 is now scaled to the point where you can keep trading it. And we've successfully prorated millions of dollars to multiple people to do that, right? I mean, the vision is quite simple to understand if you've taken the time to feed into it. And if you take the time to understand our model and the way we trade, we are aiming for literally real traders. So partly what this video is aiming at is to ask you what it is that you wanted what is it that you actually want as a trader, right? Is it that you want to get a large funded capital account, kind of hit a trade and pretend like you've quit your job and become a good trader and get a reset every single month? Or are you a trader that wants to get on with a prop firm, with a platform, receive money that you wouldn't have otherwise, build that money and account up over time with the flexibility of much, much lower risk in the start to account for our lower drawdown, lower balance, etc., and lower leverage, right? And over time, build that up to an account that's substantial, large, has a large drawdown buffer at this point, and you can continue growing that with your withdrawals along the way, right? Because once you get to, let's say, 1,500K, your average 1RR win is, what's the math on that? Is about 12K, 12.5K, and I would argue that a 1RR of around 10K even is more than enough to substantially live off for the rest of your life if you're able to do it consistently. But if you're not, you are not going to like my firm, you're not going to like the idea behind it, and you're going to find a lot of hate with it. So what I found is a lot of the people that, a lot of people preach that they want to be full-time traders and they want the freedom element with trading, but at the same time, they don't recognize the type of work you have to put in to actually get there. And I know this video might not do as well as the others because we're just kind of talking to each other, so you can see me right here, but I kind of wanted to get this point across to you because, you look at this chart and yeah, it's beautiful because you can see all these blue things, but you don't know that the 6 hours each session that I had to put in to experience the losses, to experience the break-evens, to experience the commission losses, to then have to hold the trades that are actually running with the understanding that they can easily fail and not run, having to miss trades that are beautiful and great trades and having to sit there, right? And at the same time, having people and watching people in the mentorship hit great trades as well while not always being able to catch them, right? Because I might be helping them, I might be talking with them, and so on and so forth, right? But at the end of the day, as a trader, you are aiming to trade live funds under real parameters, not simulated ones. And if you want to be a real trader, that means that you need to have that desire to, over time, compound an account and grow that account while at the same time allowing that compounded buffer and large buffer to stay in the account while withdrawing things over time. That way you can continue to make money, make more money, risk more, lose less, hopefully, and withdraw more, right? We are not looking for traders, or I do not teach people to think in a very short-term mindset. It's not going to be beneficial for you, for me, for mentfunding, for my mentorship, for anything, right? A lot of people get into trading because they want that quick riches. They quit. That's fine. A lot of people get in because they think once they get a funded account, they can just hit a trade or two and they can just sit back and let the reset take care of them. But eventually that will come to bite them in the ass because they, again, do not understand an edge that they have in that market. So over time, it's going to end up in overall failure. Just like many hedge funds go out of business. A lot of hedge funds have a model where they will take on a shit ton of investor funds, pay themselves fees with that investor funds, have a mean reversion strategy, which basically means a very, very high win rate strategy. So it looks good to investors on the outside. And this strategy will work for 8, 10, 15 years even, and then it will all collapse. And what I'm trying to make you guys see is that if you don't like my model, that's fine. But if you're mad at the model because of the lower risk parameters and the forced risk parameters that we are trying to employ for real trading, it might not be the firm that you don't like. It might be the fact that you don't like the fact that you have to actually grow an account over time. And I'm not trying to attack you or anything like that. I used to be the same way. When I first got my first FTMO funded account, I blew it after the 3rd months of payouts, right? The first month, I made a payout. The second month, I made a payout. Fantastic, right? Made all the payouts I needed because it kept resetting. And then the 3rd month, I just lost it. I wasn't able to get just a little bit of profit to take that out, right? And again, the profit was enough to live off. Just like these hedge funds make way more than enough profit to live off. But eventually, it's going to collapse unless you have something grounded that you can actually trade. And that is what I aim to instill in my members on YouTube, right? My viewers on YouTube, in my actual, in my clients on the mentorship, and in the people that are coming to get funded with mentfunding. And I have a lot of cool plans for you guys in the future as you begin to get funded. I'm going to get you guys on the channel talking about your overall journeys, how you were able to do it, and what your psychology is like, because I think it's a very vital point. And not enough people have the education behind actual psychology in the markets, right? Like, back to the prop firm example, my prop firm at 1 to 10, it's not looking for flukes. But what's interesting is you can easily, well, not easily, but you can pass a challenge in 1 day and under 24 hours with that 1 to 10 leverage. It's fully possible. 1 to 10 leverage doesn't limit you from doing things quickly. But what it does do is it instills much more coherent and strict risk management on behalf of the people that come to work for us, as well as the lower drawdowns are based in the fact that we understand that risk should be optimized and brought down. They need to be flexible with it. We're looking for traders that are flexible. When I ask you what you want to be as a trader or what you want to do as a trader, if your answer is to have the freedom to be able to travel, to be able to be with my family, to be able to work on my own time, well, you also need to recognize that that comes with the fact that you need to be ready to be flexible and build over a longer term period. Now, I don't care if you do this with my fund. I don't care if you join my mentorship. I don't care if you do this with another fund. And I don't care if you do it with a personal account. But at the end of the day, you need to recognize that you either have an edge or you don't. And that edge, as long as you have it and it's profitable, with the exception of swing trading right now because we don't offer weekends just yet, can be executed in any model with the proper brought down risk management, right? And even on the $1 million account, if you risk 0.25% of your $1 million account, that is $2,500, right? That means that if you hit a normal 1 to 10 RR at 0.25% risk, you've just made 25K on your account using 0.25% risk, right? Wait, yeah, 25K, goddamn, that's a lot of money. Shit. Well, that's how you do it, right? That is why I incentivize people that actually know what they're doing to go with the $1 million account, and that's why our mission statement is going to be this guy. Pause it, read it if you need to, right? So at the end of the day, I keep saying at the end of the day, I don't know why I do that, but what I think is really important for a lot of people to understand is that if you are looking to do this full time, you need to understand that that's going to come with time put into the market and not instant gratification in the form of withdrawals constantly every single month with resets on your drawdown. That's not what we're looking for. I don't shun other prop firms for looking for that. And I think that people that are profitable and making money with those prop firms are doing fine. But I'm also asking that you understand why I've offered my prop firm the way I have, why I've structured my mentorship the way I have, why I've structured my YouTube the way I have, and why I deliver content to you guys this specific way. I'm looking for a very specific type of thinker, trader, and psychology master. I'm looking for a specific type of risk manager, the flexibility in risk management, and that's what I'm looking to get funded with my firm. I'm looking for someone who can take something like this and turn it into a profitable, flexible strategy that they can use on my fund. Or I'm looking for someone that can take something like this, right, like Elliot wave or anything like this, and execute it on my fund, right? Even if you're a higher time frame trader, right? This was, I think it was a 15-minute entry, right? There's a lot of things that can be done in this market, and there's a lot of ways to get yourself involved, get yourself thinking, right? But I think it's vital that a lot of you take a step back and really ask yourself what you're looking for. Because if it is a full-time trading career that you're looking for, well, that's going to come from the understanding that there is no such thing as instant gratification. That instant gratification will happen when you hit a normal 5RR, 10RR on a $1 million account, right? But then you keep trading it and you lose some of it and then you make more of it back and you lose some more of it and you make more of it back and then you go through drawdown periods and then you make it all back, right? The point of trading is this cycle of give and take. Expense for larger reward. Expense for larger reward while keeping your psychology intact and not crumbling. And that's going to happen when you make the realization that my prop firm isn't here to attack you or to attack your trading style, but it's here to limit you from a gambling mindset. And if you aren't able to limit yourself from that gambling mindset, it's going to come back to bite you in the future, just like it does with some smaller and mid-sized cap hedge funds over years, just like it does to many high-end traders, just like it does to billionaires that end up letting their emotions take advantage of them and losing that money, just like it does with people that win lotteries and have all this money and lose it all. It's in that same thing, just like a gambler keeps going back to the casino, right? I'm not looking to give you a chance of hitting a blackjack to make money. I'm giving you a chance of learning to play blackjack by learning how to properly count cards, learn that edge, and execute it over long enough with a bankroll that is substantial enough to make you money over time without banning you from the casino when you know how to card count. That's the beauty of the market. You can become a card counter, a much better card counter than you can in blackjack, with a much higher percentage if you need to, and a much higher reward, and not get banned for doing it. How amazing is that? But that's only gonna click with you if you actually understand the psychological element of trading and what it looks like to build an account over time. I'm not looking to give you a chance at a quick gamble. I'm not looking to give you a chance of reset drawdowns every single week. I'm not looking for someone that constantly takes out profits. I'm looking for someone that takes the time to build an account, whether it be a 100K, 200K, 400K, $1 million account. Hopefully you go for the 1 million. I want to get as many people that can trade funded with $1 million, so our fund overall can begin to create very, very large gains on the profit of our traders, especially if they're handling millions of dollars. That's phenomenal. There's nothing better than that as a mentor in terms of feeling, as a trader, and as someone that's brought on all these people to make them profitable and begin to reap the rewards of basically my labor and their labor now, right? And at the same time benefit all of us, with the exception of the people that don't actually know what they're doing, don't take the time to learn what they're doing, and lose money. So why do I offer one step? Why do I offer lower leverage, lower drawdowns, lower daily losses? Because I'm looking for the high-end risk management, and it's not easy to find, and there's going to be a lot of hatred that surrounds it. I mean, like, even for my free YouTube, I get a lot of hatred in the comments. A lot of you are very supportive, and I'm so thankful for that. I'm never going to stop doing this. I absolutely love doing this, talking to you, getting my thoughts across, especially when I'm just sitting here and I have just thoughts running through my head, or I'm talking with people in the mentorship and some of them are going through some stuff or issues, and as they're going through those issues, I'm able to think of ways to make them to make them think differently, change their perspective, and I'm able to deliver that every week to people in here, get them funded, get people thinking a completely different way, and deliver entry criteria and details and perspectives that have basically shifted the way people have thought about the market. So I like to do that with you guys on the channel. I look for these little psychological talks to act as that as well. And if you're still here, we can go over and talk a little bit about what happened this week, just because why not, right? You sat here this whole time, so let's give you some trading knowledge, even though the psychology is a huge trading knowledge aspect. But again, we pretty much went over everything here. There's nothing too crazy. Start of the week, I had two main targets. I had the target up here, so we can go to a 1 hour chart here. So start of the week, basically, my main target was this one down here and this one up here. Now the question is, how do we get to either one of them, right? Because we can kind of play back and forth. And intermediary targets was this high right here, this high right here, this low right here, this low right here, right? So these were all the intermediary targets throughout the week because, as we know, swings on either end hold what above them? Buy stops and sell stops, right? Buy stops above the swing highs, sell stops below the swing lows. So what does that mean? That's going to mean that those are going to be some form of targets in the future for whatever price delivery wants to occur on the lower time frames, right? In the form of all the setups and ways that I teach you guys on this channel. So we're actually going to have a 3-step box methodology video coming out very soon that we can talk about, so you guys can get a better view of how we think with that and how you can utilize it yourself to go and test to get yourself in a much better place than you were before. But at the same time, so we had those targets at the beginning of the week. You can see on the 15-minute, we had this bearish structure. And as we had this bearish structure, we were basically looking to position ourselves short throughout the week. Start of the week, we had some buys here because I thought we were going to come deeper into some of the inefficiencies and supply zones up here. We weren't able to do that. So instead, we took some -1s there. Herder, it happens, you know, all good. Then we were able to catch this very, very nice sell from the top right here in this inner structure. And for any of you that are using the box methodology, right, you have impulse, box, Wyckoff, right? That's, again, the 3-step box method, the thing I've taught forever. POI or structure, POI entry, or structure, SND confirm, or as a lot of people like to teach it, AOI, POI, whatever. Use whatever words you want. At the end of the day, it's a 3-step process invented by mentfx truly for all of you to go and utilize and to basically create a completely different perspective in the markets that, you know, would take you years to amass. It definitely took me years to get here, but I'm more than happy to share it, and I love doing what I do. So thank you for the immense support. So again, overall, you know, this was not my final TP. Like I said, this was overall targeted all the way down here. Honestly, it was targeted on that daily, but we're not going to talk about that right now. Hit most of its areas, hit the 1 to 50, and then came right back up to break even. Same thing next day. Looking to take this. This had a target all the way back down here, targeting this as well as a low. So this became an intermediary low that I would target throughout the week because it was a great low that set up, but never got there. Instead, came down, came here, and then took me out of break even after I took partials. That's fine. Yesterday, again, all these targets were still in place. I still wanted them, but we came into this market bullish from the previous session. And as we came in bullish, I was going to keep just looking for buys to take out this specific high. And I was able to find a buy in here after taking a break even and a -1 down here. I was able to take this up to this liquidity, and overall was targeting this equal high liquidity right here. So we can draw that out. There it is. So that got delivered perfectly, but it took me out of break even before delivered. So again, you're not always going to be part of all the great moves, right? I talk about this all the time, but I think it's so important to get down. And then this was during this morning session. I was watching it. I forward tested it, but I did not enter this. So there was a great sell in here, but I wasn't able to take it. There was actually great buys and sells everywhere. But again, this goes to show, like, if you remember this buy right here, right? This goes to show how when you have an understanding, right? So you can see he has the same buy basically right here, a little bit lower than me. Here's his buy. That was just phenomenal. But it goes to show that when you have an understanding, a grounded understanding of seeing how structure is delivered, thinking a specific way in terms of the 3-box strategy or with a rule-based philosophy, which again, I got from a number of mentors and people. If any of you have heard about The Complete Turtle Trader, I talk about it all the time in the mentorship. Phenomenal book. Definitely check it out. Richard Dennis is a huge inspiration to the way I trade and the way I think. At the same time, Tans from Vertex Investing, amazing guy. Love talking with him. He's always preached this rule-based methodology, so I think that's great. I didn't learn about the rule-based methodology from him or from anyone really. Rules are always a part and a large substantial aspect of the highest end profitable traders, right? No profitable trader will tell you that they don't have rules. Whether you're an algorithmic trader, a fundamental trader, a technical trader, you have rules. If you're looking at fundamentals and you're checking to see the number of soybeans per square inch capita, or whatever other fundamental things that those people look at, they're doing so under a rule-based system. They have specific percentage points or specific numbers and numbers differentials that they're looking for to get into stuff. If the numbers are not good enough or not different enough or don't provide for them enough of a value to buy, to hold, to have that fundamental value meet its actual value or whatever it is they fucking do. Again, I'm not a fundamentalist, so I don't do that shit. But it's all the same stuff. They're approaching it algorithmically, right? If you're someone that is algorithmic, well, you're doing exactly that. You're looking at a confluence of multiple things you coded, and when those things are clicking off, that's your go-to, right? Like if it's like, if there's a blue dot and the moving averages are crossing, fucking send it, right? That's how you do it algorithmically. All good. Same thing with technicals. If I have my structure, if I have my S&D, if I have my confirmation, there's no reason not to go. And then you have your targets preset. And that's exactly what we look for. And because of this way of thinking and this way of getting involved and being able to spot where liquidity is in the market, how to go and trade to it, and how price is delivering in terms of like a 3-box strategy or something like that, that's what's going to create that edge, and that's what's going to create confluence even when you're looking at a 1-second chart. So this was a 1-second entry. He also had a 1-second entry, and he had one actually a little bit before. But how is it that both of us looking at a 1-second entry were able to get a trade? Was it because we're just lucky as fuck and we just know how to find one, like we're just watching this 1 second like Houdini? Or is it because we have a solid understanding and grounded understanding of how price may deliver, how we analyze, how we look at runs on liquidity, and how we look at mitigation and look to enter on that? Well, I'll leave that up to you to decide. But again, go into your charts and test any of this. You'll see it. And at the culprit of everything, at the very bottom of everything, the same setup is true that I've taught forever on this channel. The 1, 2, 3, the structure, S&D, confirmation, or Wyckoff, right? Or the structure, liquidity, POI, whatever. The main thing is those 3 things take everything into account. And I'm going to talk about that in the next video. But as you can see here, there's nothing different from what's going on here, right? What do we have? We have box 1, box 2, box 3, right? As a Wyckoff, right? And even before that, we have box 1, box 2, box 3. I'm not going to get into it too much here. I'm going to talk about it more in the mentorship. I think this video has gone long enough. But the main premise of this video is to basically get you thinking about trading in a different light. I know a lot of you preach that you want to be traders. A lot of people say that, and a lot of people quit very quickly, right? It took me 10 years to get to the point I am today to be able to deliver stuff like this, actually 11 years. So, and a lot of those 11 years were spent learning too. I wasn't always profitable for those 11 years. If anything, I was profitable for like a year or two, right? It's not been insanity. So we're not going to bullshit that. You guys know this. I talk about it all the time. But at the end of the day, it doesn't really make much sense to shun a prop firm for certain offers, especially when it tells you exactly what it wants from the get-go, right? I'm as transparent as I can be about what it is that the prop firm looks for, right? I'm transparent as fuck about the type of parameters that we offer. And the people that don't like it, it's no problem. Go with something else. But also understand why it's being offered the way it is being offered, right? So yeah. overall, what is it that you want as a trader? How do you want to trade? Are you looking for that quick buck? Are you looking for that quick, big funded account that you can just kind of take a small profit on and have it reset? Small profit, reset, small profit, reset. Or are you looking to build an account over time, amass wealth over time, take withdrawals as time goes on to substantially feed yourself, your family, be able to travel, whatever it is you want to do, have that freedom, but also keep trading as that account amasses with a locked-in buffer that you can either A, take all that money out and put into your own account, and even keep trading the $1 million account with mentfunding or whatever account you go for, or something where you are never liable for any losses and can continue to trade an account without having to worry about the loss in the account because we take that on as a liability, and you get paid out as you amass more and more and more wealth. So again, what kind of trader do you want to be? Think about it, right? Ask yourself, do you actually want to do this as a profession? And if so, how are you going to do that, right? And if you are going to do this as a profession, get onto the chart. Profession, geez, I can't even speak. If you want to do that as a profession, I just keep staring at myself in the little, because I can see myself on this thing right here. I'm like right here, and it's really small, so I've been like trying to see it. But hopefully you guys like the whole person to person, and when I'm actually on camera, because I'm not doing much on the charts right now, so maybe some of you will stay on just to watch me speak. But overall, thank you so much for watching, guys. I appreciate you more than you can imagine. And I'll see you guys in the next video. Thank you very much. Leave a like, subscribe, whatever you got to do. Leave a comment. Always appreciate reading your comments. And yeah, what kind of trader do you want to be? Peace.